Okay, well, let's go to crude oil first of all. Very simple, okay? I'm on the crude oil chart, and we have what's called a number one trade. There's not a lot of setups in this trade room we've been doing for 3 years. We haven't changed the charts. We haven't changed the setups. It's the same old boring setup every single day. So what we got to do is we got to be smart about this, though. We got to know exactly what we're doing, where we're buying and selling to the exact bar. I can pinpoint the exact trade, 15 minutes to an hour heads up. We've been doing that for almost 3 years in the room now. How do you do it if you're a new member in the room on getting these setups? It's very simple. There's a process to catching that high on crude oil to the exact bar. There's a process to catching that gold chart to the exact bar on that nice $400 trade there, nice $700 trade on crude oil potential with one contract. And what we do is, let me move this gold over here real quick. The process is this, and Gerald's recording this. The process is when you first log in, this is a $700 trade on crude. We've been doing the same setup going on 3 years now. And the first thing you do is you look at these moving averages, okay? These moving averages, if they are crossed, if the white moving average is crossed down below the magenta, then you're in a downtrend. You don't take any longs, okay? Longs are for counter trend traders, and we don't counter trend trade in the market. From 7:45 to 10:45, you don't need to trade this around the clock. You don't need to sit in front of your computer all day long. You trade these setups from 7:45 to 10:45 and get your ticks done, and then you can call it a day. So how do you do it? You got to establish your bias first. Your bias, you got to establish by these two moving averages. If the moving averages are crossed down, the white below the magenta is your dominant moving average. If it is angled down and you're crossed below it, then you're in a downtrend. Very simple. You take no longs whatsoever, okay? So it's very important that you understand that if you are crossed down, the white below the magenta, you take no longs, none, okay? The angle of the magenta moving average is your dominant moving average, and that tells you exactly what to do. The 2-minute moving averages mean nothing to me, right? Unless you're doing a number 2 trade. But number 1 trades, the 5-minute moving average is the dominant. This is the most important, okay? The 2-minute moving averages are used for my ATR trade there, Mart, and I'll go over that in a second. But let's go over the top setup. This is the number 1 trade. If you can learn how to trade the number 1 trade in the room, if you can learn how to trade the number 1 trade in the room, that is key, okay? And we need to understand that. So what you want to do is the moving averages are crossed down. There's a red dot on the 5-minute chart where the moving averages are, and there are green dots. There's a red dot, there's these red dots up here at 97.77, that's major resistance, and there's green dots down here at 96.84, major support and resistance. Then at the bottom left chart, you had major resistance here at 96.99 now and 96.55. So we trade off of those levels, and it's very simple. If the moving averages are in a downtrend, we're going to sell the first test of those red dots. If the market comes within 3 ticks on a retracement on the first test of those red dots, we're going to sell the market. Now, how we're going to do it is very simple. We're going to either manually get in with the room on a red reversal bar right here, and that happened at the top. A little bigger. There's your red reversal bar. Okay. Or you can use the bullseye trade. The bullseye is my J signal. It's a $150 a month lease. And I want to take all trades that have bullseyes on all number 1 trades. If a number 1 trade doesn't have a bullseye, then you shouldn't take the trade. If a bullseye doesn't happen on ATR trade, you shouldn't take the trade. So when you pull this chart up right there that I just posted in the room, you'll see that there's a red dot, there's a yellow dot with the red dot. The red dot is a automated Fibonacci dot that pops up in your own Ninja charts. And then the yellow dot is what's called a divergence dot. That dot told us, that bullseye told us we had divergence within 3 ticks of my 5-minute resistance. And that's how we've been doing the same trade on the 5-minute charts for almost 3 years now. So all you got to do is when you come within 3 ticks, look for the bullseye to pop. It won't come up on a number 3 all the time, so you want to look for just a red reversal bar with a fib dot. right? Because the shallow retracement, but the number ones must have a bullseye, right? You want to see a bullseye trade on the number ones. You want to see it on the ATR trades. You want to see it on the line in the sand trades. It makes it your life very simple. If you don't have J Signal on your own charts, the $150 monthly lease, and you're trading this manually in the room, that's okay. No problem. Because what you're going to do is when you come within 3 ticks of these red dots in the moving at when you're in a downtrend, these red dots will tell you exactly where the order flow is, the hedge fund money, okay? Where all the big hedges are. It tells you where all the banks are, all the prop firms, all the professional money, where it should be sitting at, and that's exactly where we need to trade off of. And it's always the first test. So the market was coming up, it came up, came up, came up. It came within 3 ticks exactly right here at the high. You want to look straight down at the divergence indicator that we put on your own charts. And triple divergence is the best divergence you can have, and I'll go over that in a second. And triple divergence, it tells you that there's a lot of supply at the high. You wait for the red reversal bar, and now you're in the trade. Your maximum stop is 13 ticks when you enter the trade. You adjust your stop 3 ticks above the swing high. Very simple to lower your stop. Okay, so once you get in on the red bar reversal, you have a 13 tick catastrophic stop, lower it to 3 ticks above the swing high. Should bring your stop between 7 to 11 ticks, depending on your fill. Okay, you don't need to have a 15 tick stop with my new Simrinko bar that I have in the room now. Your stop should be all lower down. You want to scale at the first set of symmetry or your automated dome. Here's a first set of symmetry dots or leading indicators. So within 2 ticks of this symmetry dot, a leading indicator, you'll see the price to the right down here. It automatically plots. You can scale out or take 10 ticks off. Once you're off 10 ticks, you can put it to break even or break even plus 1. Go for the second set of symmetry dots. Let the runner run. Once the runner runs, when you come within 2 ticks of my second set, bail 75% of the position. If you're 4 contracts short, you bail all. There should be 3 off right at the second set. The third set can be your final target if you don't have any support over here on your 5-minute charts. It's that simple. That's how you do $700 trades, right, with $100 risk. That's a 7-to-1 reward to risk ratio. I try to get 4 to 6 reward to risk ratios all the time in the room. Every single trade I take, I'm trying to get $400 to $600 to $700 per $100 to $130 risk, maximum $130 risk. Now we're coming into the number 3 trade coming up. So this is the number 3 trade coming up on a retest of LVA. So my point is that this is not very hard for anybody to understand because when the moving averages are down, we're not taking longs, and all we do is we sell the first test of either 5-minute red dots, whichever comes first. If it has divergence and I get a bullseye on my J Signal automated Fibonacci indicator, then you enter the trade. It's that simple. You place your stop 3 ticks above the swing high, and then you go for the symmetry dots and you scale 75% off the second. Third can be your final target if you have no support below you. Okay? There's 2 main setups that we do in the room, a number 1 and a number 3. We're working on the number 3 right now. The number 1 are these red dots in the hedge fund here. It's a retracement trade with the bullseye on our J Signal charts. Gerald, go over to gold real quick, Gerald, and then I'll shut this off. All right, gold real quick. Very simple, same old setup. Number 1 worked again, called the high. Sometimes we come in here and it calls a high to the exact tick. Happens all the time in this room on these dots. So here the moving averages were down. We had 2 spots. We could sell 1336 or sell the 1334 here. Well, the market comes up, very simple, not hard to understand. We know we were looking for a number 1 trade. There's the move up. We get into the 1334. That's the bottom left chart. There's your red dots. You only want to sell the red dots in downtrends. Right there they are. There's our beautiful doji that paused the market. There's our red reversal bar, and we got a bullseye also on the J Signal. Look at the divergence below. You had divergence also. So we had a bullseye at the top on gold, and we had a bullseye at the top on oil. They both worked out. That was a $400 move also on gold and a $700 move on crude oil. Cheryl, go ahead and shut it off if you can. Shut it off.